Hey, do you know that dividend income can help you reach your financial goals faster, and not just that, it can save you during a financial emergency? Really? Tell me more about dividend income. Passive income is crucial if you want to enjoy financial freedom. It gives you the opportunity to live life the way you want without having to worry about money for daily living expenses. Now, how about an investment that can help you attain financial freedom? When it comes to investment planning, dividend income, that is a form of passive income, it helps you attain your financial goals faster. Well, after all, as Warren Buffett, the great investor, says, if you do not find a way to make money while you sleep, you will work until you die. Well, if you want to earn dividend income and understand its taxation, you must watch this video. Hello and welcome. I am Prarthana from Clear, that is India's largest tax and financial services platform. At Clear, we serve 400k plus growing businesses and 2000 plus large enterprises. We have assisted 80k plus tax experts and 6 million plus tax filers so far. By the way, I have an exciting announcement for new subscribers. We have a free gift for you. Yes, we have curated 4 of our best calculators that will help you estimate the future cost of your financial goals as well as identify the lump sum you need to invest to reach those goals. Well, to claim it, subscribe to our channel and let us know in the form that is provided in the description box below. In today's video, I will tell you what dividend income is and the investments that help you earn dividend income. Companies pay dividend out of their profits to the shareholders of the company. The investors could purchase many stocks of such companies and earn regular income through dividends called the dividend income. You can directly invest in shares of companies that pay dividends regularly to their shareholders and you can earn dividend income. However, you could also invest in dividend yield funds, a type of equity mutual fund that invests your money in stocks of companies that pay regular dividends. Here are some essential points on dividend yield funds. Firstly, dividend yield funds invest around 75% to 80% of their assets in stocks of companies that pay high consistent dividends called dividend yielding stocks. Then the remaining assets are invested in stocks of well-established companies with the potential to offer a higher return over time. Not just that, they also invest in stocks of companies that reward shareholders with bonus shares and indulge in share buybacks, which could in fact increase share prices. Many people invest in dividend yield funds and stocks with a higher dividend yield for steady dividend income. This dividend income can supplement pension income and it helps retired people enjoy a better standard of living. Investors in equity markets choose dividend yield funds as the additional dividend income reduces the risk in the portfolio during adverse stock market conditions. Now, let's have some clarity on dividend yield and how to calculate dividends on a share. Companies declare dividends on the face value of a share and not on their market value. Face value is the value of a company listed in its books and the share certificate. Companies declare dividends as a percentage of the face value of the shares. If a company is giving a dividend of say X%, you can multiply the face value of the share with the percentage of dividend to determine the dividend per share. For example, a company with shares of a face value of rupees 10 each and a share price of rupees 50 declares a 40% dividend. The dividend per share is calculated on the face value of rupees 10, that is 40% of rupees 10, and not on the share price of rupees 50, thereby translating to rupees 4 per share. Now let us understand what the dividend yield is and why is it important to investors who seek dividend income. Dividend yield is a ratio that shows how much a company pays its shareholders in dividends relative to its share price. It helps you calculate the returns you get through the dividends from a company depending on the share's current price. Well, if you want a higher dividend income, then you must know how the dividend yield is calculated. You can use the formula on the screen to calculate the dividend yield of a share. I hope by now you have understood what dividend income is, and not just that, but also how to calculate dividends of a share and dividend yield. Don't you think you should learn more about dividend income? Well, if you agree with me, then please type yes in the comment section below. Well, you may believe that you can manage all your living expenses through dividend income alone. Not having to work and living on dividend income alone does sound great, but is this practical? Yes, you may be able to live solely on dividend income, but you will require to have a portfolio of crores of rupees in high dividend yielding stocks to do so. However, this is not feasible in most cases, and you must use dividend income to supplement your salary and other income, if any. Let us understand why it is not possible to live on just dividend income. Well, suppose your total yearly expenses, both regular and irregular, are rupees 8 lakh. To generate a dividend income of rupees 8 lakh per year, you need to build a portfolio of dividend paying stocks worth rupees 2 crore even if the dividend yield is 4%. Few investors can build so high a corpus to survive solely on dividend income. Your expenses would keep increasing every year because of the rising inflation, and you would need additional dividend income to match it. Now, companies may pay a higher dividend initially but fail to maintain the pace after a few years. Many businesses which pay higher dividends are slow-moving, mature firms. These businesses may grow at a slower rate in the future, affecting their ability to pay higher dividends after some time. Experts recommend that you dedicate only a small portion of your portfolio towards dividend yield funds. Well, many companies that pay a higher dividend focus on paying their profits to shareholders instead of reinvesting in the business for growth and expansion. You are better off investing in companies that reinvest their profits to grow the business. It eventually may translate to a higher share price and generates wealth for you over the long term. You could invest in stocks of companies that pay a higher dividend regularly and earn dividend income. Moreover, in addition to the regular income, you continue holding the stock and can sell it at a profit if its price goes up. Here are some reasons to invest in high dividend paying stocks. Firstly, many of the companies that regularly pay higher dividends are large, well-established firms with a sound track record of profitability. Shares of companies that pay higher dividends may not crash as heavily as of course those of companies that focus only on growth during a market crash. Lastly, you get the dual benefit of passive income with the potential for the share price to rise with time. You may struggle to pick the shares of companies that pay a higher dividend because of a lack of skill and time. This is why you must invest in dividend yield funds. What are some of the reasons to invest in dividend yield funds? Let me tell you that. You have the services of a professional fund manager and the research team to pick up on the appropriate stocks. Then, dividend yield funds can give you higher returns if interest rates fall in the economy. Thirdly, they are suitable for investors who don't want too much volatility in their equity investments. Fourthly, dividend yield funds offer some protection to your portfolio during a stock market crash. The Nifty Dividend Opportunities 50 Index tracks the performance of 50 companies that have a higher dividend yield. It serves as the benchmark to check the performance of dividend yield funds. With effect from the financial year 2020-2021, the dividend income you receive from stocks and mutual funds is taxable in your hands under the head Income from Other Sources. You are taxed according to the applicable income tax slab. The company or the mutual fund distributing dividends will have to deduct the tax at sources, that is TDS, while paying dividends at 10% for resident Indians if the dividend amount received is above Rs 5,000 in 1 year. Dividend income can supplement your salary and help you get your financial goals faster. It serves as a good investment option to protect your portfolio during volatile stock markets. Received some valuable information through this video? Then please hit like and share this video with friends who may find it useful. Do not forget to subscribe to our channel to claim your free gift. We have curated 4 of our best calculators to help you estimate the future cost of your financial goals, and as I have mentioned, also identify the lump sum you need to invest to reach those goals. To claim it, please do subscribe to our channel and let us know in the form that is provided in the description box below. Take care and of course stay tuned.